The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray feeling good, Lewis. I lost electricity here a little while ago. Hope it won't happen again. Don't know why, but probably somebody in the neighborhood shorted something, but it's all back and running good. So we'll see what's happening. Folks, we've got some really interesting charts here today from across the pond. We'll start out looking at the two for the German DAX. As you can see, they're following the patterns, very, very carefully. And if you'll go to the smaller time frame first, you can see the ABCD on the upside. And then if you look at the longer one, you'll be able to see where that came in today on the longer term 60-minute on the DAX. So the next one we want to take a look at is the, hold on one second, is the Ftse. We'll get the Ftse up here. We'll look at it on the hourly first. And we've got some very important charts today, folks. I mean, we've had some action last night while you folks were sleeping that scared everybody, including Mr. Z. Even he had white knuckles in something that he always likes to trade, which is silver. Let's just move on here and take a look at the next one on the Ftse, which would be the smaller time frame, which would be the 15 minutes. You'll be able to come up here and take a look at that. You'll be able to see there's where we are with the Ftse and the DAX on the shorter and long-term patterns. Also, friends across the pond are looking very, very closely at the British pound on a long-term chart. This is a daily going back a long time. And as you know from the newsletter, we have been very, very bullish this. And we're getting up into that zone of 140, 141, where we should have some type of a pretty good correction. But this is what we've been looking at. We've been bearish the gold for quite a while. We made a new low last night at 1760. We rallied $26 so far this morning, and that's mainly due to silver. And that will be our next topic of discussion, because boys and girls, that little puppy last night shook the foundation of the COMEX. Believe me, it was really wild. I'm going to get this up here. Hopefully, I've got the chart. I know I put it up here because it was so interesting, and Mr. Z was following it the same time that I was. But let's go, oh dear. What happened to it? Please don't do this to me. I've lost it. Oh, I guess I've lost it in more ways than one. Anyway, folks, the silver market had a huge, I have to have it here. I know I have to have it here because I looked at it 6 different times and I put it in here. What did I do wrong? Oh, not good, not good. Okay, let's not worry too much about that. Anyway, what happened was a big sell order. I'll put the chart up at the break. We'll have Stan Harley as our guest today, but I'll put the chart up at the break. You'll be able to see we went down to, believe it or not, we went down to 2610, matching the lows of last month, and then we immediately rallied $1.50. We went to 2450 just as fast as you could see, and we've continued to go higher. Now, all of these metals are going copacetic to the upside, folks. If you just take a look at Mr. Z's favorite, is the old red metal, which is the copper. And you'll be able to see here what's going on. Remember, Mr. Z has been bullish this since about 349, and here we are up at, we hit 402 just a little while ago this morning. And the thing that we want to mention here was back on the 12th of February. You see that little ABCD that happened over a 3-day period? What did it do? It went back and filled the gap from 2021 in January, and then it's been off to the races. Now, yes, that is on a 4-hour. That is a 3 drive to a top pattern, but it is in a parabolic move, so it's really difficult to try to take a look at these things. So you don't want to even think about that on the short side until you get a break, and then you have a good place to risk control to the downside if that's what you want to do. But right now it's just a little bit. A little bit too bullish. So you want to stand aside in that. We did hit the 1785 in the gold today, or 1786 just a while ago. I haven't checked it recently, but that might be the bottom, folks, because we did take out those lows from 1767, and with that move we're having in silver, that could be the catalyst to make this go higher, but it's still a little early. We still believe that there's that possibility, and on the outside is that we have this potential in the gold market to still get down below $1,700. Now, you'll notice we took out the lows of January the 29th. That came in at 1767. We got down to 1760 last night. 1760 was nothing more than a 1.27 expansion of that move during January, early February. So that could be it, because you will be able to see this on a 3-drive pattern. When I do the charts over the weekend, you'll be able to see that it lines up really good. So that's a main thing to look at. The only thing I can see, David, on the $10 spike in gold is the fact that silver has gone ballistic, and those boys play in the same sandbox. So that's pretty much what you're looking at. We'll see whether that's going to be. If we can get that gold above $1,800 today, this is a really big day. I mean, this would really be a huge move here, given that's happened. And if we take a look here at the gold, we haven't done anything yet. We just rallied just a little more than one harmonic number up there at 1787, and so that really doesn't mean very much. This could all be just one day flutter, folks, but we don't know that, do we? So we have to wait and see if this is going to unfold the way we think that it's going to. Now, look. Stop and think, folks. We had the worst. I'm getting back to the news. We've had the worst news you could get for the price of being negative to crude oil. I mean, it's been incredibly cold all across Texas. 4.5 million people don't even have electricity, and crude oil's dropped $3.50 a barrel in 2 days. Now, that may or may not be the high in the crude oil, but the fact that it's acting badly in the face of incredibly good news, that is not a good sign. So remind ourselves that that's a very, very important thing to remember, that you've got to see what the market is telling you by looking at what the action is in the price of the commodities. So I hope that helps, because that's what I try to do and look at it. Now, remember, we do have this going on here today. I have to update this one. This will be updated over the weekend, but we've gone down. We made a double bottom there. We've broken below the 33 level, so we're really close to the $30 level, and this might be it in the gold. We will get a chance to buy it. I mean, the one thing I know how to do is when you get a real strong trending market, how to enter that puppy. I mean, it's not an easy thing to do, but it can be done. But that's one of the things that I'm going to be working on for the month of March, is I want to be able to get to the 24/7 people a little bit faster. For some reason, March has always been my best month of the year. And so hopefully that'll continue this year. But so far we had a really good 2020, and we've started out really good in 2021 too. So that's another good sign too. Anyway, we're going to take a quick look here at the. Hold on one sec. With the Treasury bonds, folks, you got to put your telescope on. We're ready.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I want to just bring this chart up on silver to show you what happened last night, because this took a total of maybe 3 minutes to make that low there at 2610. It was straight down and straight up. I happened to be in front of the machine like I'm usually not, but I just happened to be watching it. It happened so fast, I swore it was a bad tick. But CQG does not have bad ticks. So I said, whoa. And then shortly thereafter, Mr. Z dropped me a little note saying, look what happened. And huge volume down there, folks. So they went after somebody that was long silver with had stops in, as near as I can tell. And, I'm just saying that they went after them. I don't know if they're there or not. They usually, because of electronic trading now, they have their stops are pretty much hidden from everybody else. It's not like a floor broker holding a deck like they used to, and they'd be able to show what was going on. But believe me, they did not show what was going on in those decks, folks. When you were trading 40 years ago or 30 years ago, when we were doing things by phone and by telex and stuff, no, these decks were really heavily guarded because they were worth $1 million, because a fellow filled so many papers, it was called $1 million deck. And so those were really very, very fair. That's one of the reasons I went to Chicago to see if it was a fair business, back in 82. I stayed for 3 years, but, it was very fair. It's really quite fair. So just remember that. That's they were down there for a reason. Why, I don't know, but boy, it certainly happened, very, very quickly. Now I wanted to change your attention to something that's going to be happening here very quickly, I believe, and I have been bearish. I have been bearish bonds, folks, since at least July. That's when we had the big ABCD up there in the bonds. But you'll notice here, this is the high yielding junk bond market. You'll notice how the Treasury bonds have been going down steadily for 6 months, and high yield junk bonds have been going up. I mean, they don't call them junk bonds for not a reason, folks. You know what I mean? So there's something wrong with this chart. Either the bonds could literally collapse from here, folks. They really could. And you could see a 162 handle, even a 160. But we're right at this level right now. We're coming into a Friday, and we've got all of these patterns lining up. So you've got to be really, really on your game to watch Treasury bonds, because if you see a spike either sharply lower, or that's going to tell you, game on, and that means they're really going to start to accelerate to the downside. And that is not going to be good for stocks, because we all know that it's all part of a general asset classification, and that would not be good, for the stock market. So that's what I'm watching today with a great deal of anticipation, is how this bond market handles these next few days. I don't think anything is going to happen today, but, it certainly could. We're down about a full point in the bonds, but we're near these levels around, I guess it could tag below 163 by just a little bit, just a little below 163, and then you would have a pretty good chance. We're at 163.20 right now. So another 20 pips lower, and that could lead to a situation where you'd be able to see a market get ready to reverse. And remember, we've been very bearish bonds for a long time, and not anything to do with fundamentals or anything. It's just the fact that the charts were rolling over, and that's all we were looking at. Same thing in the Treasury notes. And that's all we were watching. So we're going to be watching it really closely these next few days. We're at the moment of truth in these little puppies, and we're going to say, don't buy them now. I mean, you got to wait till you see some type of a place where there's going to be some type of a reversal. Like if they reverse today, then you know exactly what your risk is. But you don't want to try to catch a falling knife in here, folks. It's certainly not worth it. That's 10 cents worth of value, I guess. Anyway, we'll keep those in mind as we go through that and looking at some of these other things that we're watching. But these bonds are very, very close to what we think is going to be something that will be relatively good over a longer period of time. And we'll take a quick look here at the notes, too, because notes have broken down, and they're almost at our target levels down here also. You'll see here we need to get the notes below the 136 level, and I believe we're easily below that. We're at 135. We're almost at the 135. Oh my goodness, we're right at that important support there at 135.14. That's the 1.27. That's the last important support here in the bonds, in the Treasury notes. Now remember, the notes are 6 times larger than the bonds. They have 6 times the open interest. They don't have the volatility that the bonds have, but that's where we are. We're meeting. All I'm saying, and this is a 78% retracement of the low back in March, folks. This is big time money up in here. So this is not for the faint of heart, but I'm just bringing it to your attention, because we could easily melt down from here, given the fact that we see what's going on with all the stuff that these folks are giving money out. I mean, and we got to pay for it some way. The only way we can pay for it is by, printing money, and printing money is not usually a very good thing to do. I had one of our listeners today, where can I short copper? I said, call me next week. I mean, you want to try to catch a market that's going, straight up like that. The only way you would ever do that is if you had so many numbers coming together that says, oh, this looks like you got to be able to do it. And when you look at the British pound that we're looking at it, we're not looking at a market that's going vertical. It's going up little by little. And we've been bullish on this thing since 128 when it made a 382 retracement. And now we're right in that ballpark where it's going to be, real interesting to, pay close attention to. So that's, remember that these things can go up and stay up for a long time. You remember last week we were talking about 1300, in the 1300 in the platinum, and we got to 1348. We went from 1348 to 1210 in 2 days. So that just shows you the wildness that you're having in some of these things. So if you're not using stops during this type of volatility, folks, just get ready to keep your employment applications out there, because it ain't going to be long before someone's going to be knocking on the door and saying, holy moly, guacamole, what did I do? And you'll be really looking at that. Mr. Z, you're right. That was a 3 drive in the gold on the downside, but you had to be there watching it. Otherwise, it was not anything to really, to hang your hat on. But it did have a nice move up. If we move more than $32 higher in gold, which would take us up about $17.92, that would really tell me that we've changed trend in the gold. And I will be looking for a good spot to enter that. And I'm hopefully we'll be able to get some of these things out to you just as fast as we can. But even then, you have a pretty good idea when I send a chart out, how to use a little bit of common sense with it, and that's really all you have to do. We got Mr. Z on the line for November soybeans, but we've got a break coming up with Stan Harley as our guest. Z, are you there?
Hello, Larry. Thanks in advance for having Stan on. Wanted to ask you, please, if time permits after Stan, if you would pull up that new crop soybean contract and tell us what your upside targets are, please. I thank you in advance.
10-4. We got a big report today. We'll do that right after we have Stan Harley. I'll be able to do that. Stay folks. Stay tuned, folks. We have Stan Harley do.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I believe we have Stan Harley of the Harley Stock Market Letter on the line. Stan, how are you doing today, my friend?
Good morning, Larry. Doing just awesome.
Still feeling as bullish as ever, my boy?
Well, I am. I do. I have a bullish outlook on the market, although in the near term, I think we're probably going to do some consolidation. But down the road, certainly for the intermediate term, I think the stock market's going to head higher.
Well, I have to compliment you on the fact that, you were very, very bearish coming into 2021, and then you changed and have stayed on the long side of this for the, vast majority of this run we've had over this last 2 months. So it takes a great technician to change the flow of the ship as it's going down the river. So you did a great job with that. So I don't see any reason why we can't go higher from here. It's certainly the trend is very high, very strong, and every time we back off just a slight bit, away we go to the upside. Stan, what are you looking at as far as some key cycle lows and highs coming in here soon? I posted your chart here, by the way, your time count. So can you explain to the folks what you're looking at here?
Absolutely, Larry. You and I have talked about this on the air in the past. I have found that the dominant cycle on the daily charts for the stock market tends to fluctuate right around 40 trading days. Rarely will you see a cycle, a low to low. When I talk about cycles, I'm talking about trough to trough sequences. Rarely does one see a cycle low of 40 trading days from low to low, although you can see on the chart there was one over at the left. But usually that cycle contracts and expands. And normally we have this phenomenon that I call the rule of alternation. That is, one cycle contracts, the next one tends to expand. But the average over the long haul is right about 40 trading days. And so what I've done here go ahead, please.
No, I interrupted you, my friend. Please keep going.
Well, this is a chart going back a little over a year. And what I've done with the purple lines is I've shown what I call the trading cycle lows on the S&P chart. And one can see 40 trading days, 35, 37, 31, 61, 26, 61. And it's my best estimate based on my analysis that we've probably seen a trading cycle high. We saw the S&P top 3 days ago, and then the Dow topped the following day. I think we are consolidating now, and I think we're going to make the next low about 28 or 29 trading days from the January 29th low. So that would put the next trading cycle low in the vicinity of March 11th, March 12th. And by the way, if you average all those trading day counts on the page, 40, 35, 37, 31, all the way through, add them up, divide by 8, you get exactly 40.0.
Oh, that's that one you've been famous for. The question that I was going to ask is, could you explain to the folks and to me what you mean by the rule of alternation?
Oh, yeah, yes. As I said, it's my experience that the nominal cycle is 40 trading days. And so if one cycle contracts below that number significantly, the next one tends to expand. So the sum of the two consecutive cycles is frequently in the neighborhood of 80 trading days. So, for example, the last cycle was 61. Okay, that would suggest this next trading cycle that we're in now should contract below the number 40. So the sum of the two should be approximately 80 trading days. I think it's probably going to be about 89 bottom to bottom from the low back on October 30th to the low around March 11th, 12th. I think that'll be approximately 89 Fibonacci days bottom to bottom. So this cycle that we're in now would contract. As you can see, the prior one 61, the current one 28 to 29.
Okay, well, what gave you your first clue of the rule of alternation? Do you remember? Because I know you've been doing this for so long.
Yeah, I just observation on the charts, Larry. I just many years ago. When I say many, I mean like 30. I started seeing this 40 trading day pattern in the stock market, and I followed it ever since. And I've last time we were on the air here a few weeks ago, I went back and did an analysis of the trading cycles going back many years. And there's a number of ways one can track the nominal length. One can compute the average. One can compute the median. One can he said, one can compute the regression modeling. There are all different ways to come about the computation for what the nominal length. I look at all three and kind of average the three of them, and it comes out to be right at 40 trading days.
Stan, many years ago, Peter Leides lived in the Los Angeles area there in North Hollywood. Did you ever see his mosaic of the stock market that he did by hand? It was in this roll of chart paper. Did you ever see it?
Oh, absolutely. Well, I lived in L.A. too, as you did.
Yes, and, of course. Yes, yeah.
We're all part of the family of KWHY Channel 22 television. Yep. Peter was a regular on that station, as you may recall, and he used to show his work. But yes, the answer to your question is yes, I absolutely remember that.
It was like a giant Torah, folks. I mean, it really was. It was about 3.5 feet wide, and it was rolled up. And he had, I think it was going back into the 30s. He had every single day. He had charted these by hand. And I mean, he's meticulous. He's an artist because he's a magician. He plays clarinet and a piano. My goodness, it was incredible. And I asked him, just as about 3-4 years ago, when he was living up in where he still is in Santa Rosa, if he still did it. And he said, "Yep." And he said, "My son George is doing the work now." So it was really incredible to see that. What I'll try to do is I'll try to get in touch with Peter and see if he'll take a picture of it so I can show the folks, what it's really like to be a technician over a 60-year period and keep every single day of the Dow Jones Industrial Average. It's really an incredible piece. Hey, listen, my friend, I want to thank you for being on. I know your time is really valuable. We'll have you on again in March around the 11th or 12th. So put that on your calendar. Maybe we could do something, say, around the 12th of March. Would that be okay with you?
Absolutely. Look forward to it.
Okay. Put it on the calendar, folks. We're going to have Stan Harley on the line. Thank you very much, my friend. And stay out of all that snow, partner.
Absolutely.
Okay. After all those years in California, here he is in the middle of the snow. All right, folks, we're going to take a quick break here. Before we do that, let's write on our calendars. I'm doing that right now as we speak on March the 12th. We're going to have Stan Harley on, STAN. I don't want to forget this. And that'll be on March the 12th. The cycle low is due, and we'll see if that is going to be one of those days of alternation or whether it's going to be an actual high or low. So we'll watch that coming attractions is what we'll say here. Okay, let's take a quick break here, pay a few bills, and we get back. I want to be able to talk to you a little bit about this. We got a big crop report today. Grains are going to the moon and maybe higher, maybe even into Mars and Jupiter. Who knows? But there's a big crop report today, and it'll be everybody's expecting it to be very, very bullish. We'll be right back. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and I want to mention that Mr. Z's chart of the November 21 soybeans, these are the ones that haven't been planted yet. They'll be started to be planted here in around April. But this is the new crop beans, and you'll see here that we've had a supposed, this is not a double top, I don't believe, but it's taken almost a whole month to go back to those old highs at $12. The new crop, of course, have been higher, but with this, the old crop has been higher, but this one is where we are. We're trading about $1 a bushel under the old crop. The old crop is trading around almost 14. It might even be 14 today. But we have a report today coming out in about an hour or so, and this could easily get up to the 1.27 level of 1231 or 1267. That's what it looks like. Or this is a double top and it stops right here. It's a report day. So whatever is going to happen is going to be something that is going to be, real interesting. We're just making highs here in the wheat. I see we've gotten up to as high as 671 3/4 today, and that takes out, makes it. It actually is getting into that double topping area of the 1270.80. But this is a very bullish chart. Those of you that have been watching the markets for the grains, they do look, very, very bullish. But we're in a spot now where we could easily run into some pretty good indications. By the way, those of you that are wondering why the markets held the resistance up there at the 37.31, the 37.30 was an exact retracement, 61% in the S&P 500. So as long as that isn't taken out, we might have we could still be in a potential correction, but it's a bit early for that. Don't mess around with these grain reports, folks, because they can be very, very dangerous, as we well know. But by any stretch of the imagination, it's going to be interesting to watch. Remember, the news comes out after the trend because the news follows the trend. We've seen this in the crude oil this week. This is a perfect example. We had incredibly coldest weather Texas has had since Davy Crockett was at the Alamo. They had big snowstorms in Amarillo, folks. San Antonio. Amarillo. In San Antonio, where the Alamo is. But it's been very bad for those folks. We have friends in Houston that have just had a terrible time with busted pipes, and oh my gosh, it's just a nightmare. But this is all going to pass, and we've had a $3.50 break in crude oil during this moment of time. And remember that the big retracement level in the crude oil that we posted in the newsletter several times, was right up into that area where what should have been some pretty good resistance area, and that is in fact what has happened. And we also saw the same thing in heating oil and also in gasoline related to the news that came out with these things that are moving around. Just a minute. Hold on one second here. I want to do something here. I have to check something. This is the most busiest part of the day for me, because this is where the first hour of trading or so is when I usually have most of the trades that I'm looking at. And this is one that we're still watching it here early this morning, but it's actually the one I'm watching the closest now is the crude oil, because if we can get the crude oil, we've had a nice rally off the bottom here. We've rallied about $1.20 a barrel so far this morning, and I'm thinking possibly that the crude oil, the range that we've had, we have a beautiful ABCD pattern. I could show you that right now. Since this is what I'm doing for myself, I better do it for you too. Hold on one second. I want to draw these in, and you'll be able to see the Gartley that I'm waiting to see happening up here. Just get it up here, and then you'll be able to take a look at it. Now, when you do these trades, remember that they only work part of the time, folks. If you get up to 60, 70, and you want to sell it there, you're lower than the previous day. You're making a 61% retracement. You got an ABCD pattern lined up in there. Then that's the one that you want to, put the hammer on, and you don't have to risk very much. So those are some of the ones that you're trying to keep an eye on, because those are the ones that I think are the most important. We got a caller coming in, I believe, and it is from Jeff in Philadelphia, and he has a question about the grain report, and I'll probably be in trouble, but go ahead, my friend. What's on your mind?
Hi, Larry. I'm sorry to ask you this, but can I ask you the name of that grain report? Because I'm looking at the USDA schedule of reports, and
okay.
I don't see any today.
All right, just a second.
I'm aware
I think it's today. Just a minute. I believe it's today. I could be totally wrong, because I get these from Rich Anderson. It's the oil and grains outlet. Hold this. Let me get this up here. I'll just I'm going to post it into the room so you'll be able to take a look at it. And it's called it might not be today. I could be wrong. This is the USDA Agricultural Outlet Forum, 97th annual. It might be a meeting coming up. I don't know. Yeah, it's Friday, February the 19th. Yeah.
You know what that is? That's that's like an educational webinar about the implications of the outlook on the market.
There you go. See, I let Rich tell me what to look for, and so he sent me that, and I thought there was a report today. But I just look at the charts, Bubba. That other stuff is so far over my head. Jeff, I think I've said this so many times, but one of the biggest changes in my life occurred in July of it was late June of 1976. I was long beans, oil, and meal out the kazoo. I had more than I was limit positions, which was 1,200 contracts. It wasn't mine. A lot of other people were involved with it. But it was the most bullish report ever. And I was so nervous that I made a lot of money. And so I put my stops at break even on the day, because I figured if the market couldn't go up with all that bullish news, I didn't have anything to do with it. And Jeff, I got out by the skin of my teeth that day, because the market was due to go limit 3 days in a row. It opened 4 or 5 cents higher and went limit down for 3 or 4 days. And with the most bullish report they'd seen since Moses discovered the soybean. Actually, it was somebody in China that did that. Hey, listen, thanks for calling in. I hope that answers the question. I know you've emailed me a few times about these, but should get on Rich Anderson's mailing list, because he's the one that would. I shouldn't have said that. I don't want to get that involved here. But let's. Rich is very, very helpful. So he's the one that I rely on. But the main grain reports, of course, happen on Friday at around 11 o'clock. But this is, as you say, it's a webinar and this is something you should watch, too, if you're interested in seeing how these guys talk about the fundamentals.
Yeah, Rich, the last time Rich was on your show, he did recommend to everybody to attend that webinar. I actually signed up for it. That's the only reason I recognized it.
Oh, good. That's a Big 10-4. That's terrific. Good. Glad to hear that.
Okay, well, thank you. I didn't. Sorry to take your time. Thanks.
No, you're not taking my time. Enjoy it very much. Okay, folks, we talked about the price of gold getting up to the magic time up here, and we're almost there, folks. 1792. Watch that puppy with the golden goose, because that is the harmonic number in the gold at 1792, and will be interesting to see what happens to it up at this level, because that could change the whole gamut of whether I'm going to be bullish or bearish gold in the coming days. But we're now almost $32 higher. So pay attention to it. 877-927-6648.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, we got more action than Action Jackson at Disco Tech, folks, and this is going to be the start of it. You're going to see action like this until they finally get tired, and that's not going to be until well into the summer doldrums, is my expectation. Anyway, I think volatility is going to get really crazy here and all these things, which is ideal to what we like to see. Keep in mind, folks, watch the bonds. I believe that's the largest. The bonds and notes are the largest of the commodity markets. Extremely oversold, down into the absolute major support in here. So be sure you check in with the newsletter here over the weekend, because we're going to be doing some really good patterns and cycles on the bonds, because I think we're very close to having our short covering rally, and I believe that's all it's going to be. But it's so oversold and so heavily involved on the short side, because open interest has been increasing on the downside, which more shorts are coming in. And when the market gets oversold, it has a tendency to move, and that market can move very quickly, as many of you know. But we are at the moment of truth in the notes and the bonds, so watch those. Of course, we want to look at one other chart that we brought to your attention, which was on Monday, on Tuesday's show. Let's get that right, Larry. And that was this resistance up here between 39.20 and 39.40, the high being 39.59, and that may or may not have any implication at all. But those are just a few of the things that we want to be watching as we go through here. Don't even try to sell copper up here, folks. You're trying to catch a falling knife or a shooting star. You don't really need that, because if it's going to be a top, it's going to break. It's going to give you a really nice ABCD pattern, counter trend. You'll know exactly what your risk is. Where in the heck do you put your risk here now in copper? Hit what, 402 or even higher today? So, it's silly to do that. That's not the same thing, as trying to find something that's tradable where you don't have to risk very much at all. So that's the main thing. So live every day in an attitude of gratitude, and may God bless. And be sure that you take care of your neighbors, folks, because some of them are hurting really bad. See you on the flip side.